Indian stock markets tumbled on Tuesday after the United States announced an unexpected 25% additional tariff on Indian original goods. This move immediately shook investor confidence and triggered a broad-based sell-off. Let's talk about the market performance. The NSE Nifty fell by 255.70 points or 1.02%, closing at 24,712.05. Similarly, the BSE Sensex dropped 849.37 points or 1.04%, ending the day at 80,786.54. Markets had expected some delay in the tariff rollout, but its sudden implementation came as a shock. Now, when we look at the sectoral impact, almost all sectors saw declines except for FMCG. Realty, PSU, banks and consumer durables were worst hit, falling between 1.8% and 2.2%. Analysts warned that industries such as textiles, gems and jewelry, auto parts, leather, furniture, chemicals and seafood could be most vulnerable to the new tariffs. On the other hand, pharma, electronics, energy and critical minerals remain exempt from the duty hike. The investor activity that the foreign portfolio investor FPIs reached negatively, selling shares worth Rs 6,517 crore. Domestic institution, however, stepped in and purchased shares worth Rs 7,060 crore, showing confidence in the Indian market's resilience. When we talk about the market volatility, the sudden tariff shock increased uncertainty. The Nifty volatility index jumped 3.7% to 12.19, reflecting heightened caution among traders. Broader market impact in the mid and small cap indicates phased stepper falls compared to the main benchmarks. Nifty mid cap 150 chat down 1.5%. Nifty small cap 250 that down 1.9%. Now UF tariff details. Global outlook. The US decision adds an extra 25% tariff on Indian original good, pushing total duties up to 50% for several export categories. According to Trin Nguyen, senior economist at Netix, the short-term impact will be manageable because India imports more than it exports, balancing some pressure. Exports to the US account for only about 2% of India's GDP. Now, when the long-term concerns risk remain, experts suggest India must consider strategic tax cuts to ease the burden, diversify export markets, especially towards the US and EU, push forward with trade negotiations, including the Indian-EU Free Trade Agreement. Policy direction situation also highlights the importance of strengthening the Make in India initiative, not just for domestic growth, but to boost competitiveness in the global market. In the short run, the impact may not be severe, but the long-term challenges of trade diversification, negotiations and competitiveness remain critical. As tensions evolve, all eyes will be on how India responds to protect its exports and economy.